NVIDIA releasing its second quarter results here, taking a look at the street's reaction, up just about 0.7%. It looks like it is a beat here from NVIDIA in the second quarter. Taking a look at adjusted EPS coming in at 68 cents. The estimate was for 64 cents. We know much of the focus was on the data center revenue specifically, so let's get right to that number. It's $26.3 billion. The estimate was for $25.08 billion. When you take a look at overall revenue, that's also coming in better than what the street had been anticipating for the second quarter. $30 billion flat. The estimate was for $28.86 billion. You take a look at some of these other individual lines that are coming across right now. The company also approving an additional $50 billion in share buyback here during this quarter. And looking ahead here to what they are expecting, we know guidance was critical here and key, something that the street is closely watching. Take a look. They see third quarter revenue of $32.5 billion, plus or minus 2%. The estimate on the street was for $31.9 billion. So Josh, when you take a look at this, what is yet again another very strong report here from NVIDIA, and at least at initial take, shares moving to the upside, up just about 1%.
Yeah, you make a beeline for that data center number, Sean, as you mentioned. They beat on that. They also beat on gaming revenue, 2.9 versus an estimate of about 2.79. Looks to me like margins did hang in there. Adjusted gross margin, 75.7%. The estimate was 75.5%. And the shares rising. It looks like, well, now we're down about 0.6%. I'm interested for a lot more color and commentary from CEO Jensen Huang, both about the current lineup of the so-called Hopper chips, which have been wildly successful, and the new AI chips on the way, Blackwell.
Here we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin with the chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments below so that other traders will be able to find this information more easily on the platform. So the major event risk for this week is in the rear view mirror at the moment. NVIDIA did release earnings. In my opinion, they were extremely strong, 122% gains in revenue, 156% gains in operating income. Margins were very strong, and the company announced $50 billion in share buybacks, and yet somehow the stock is trading lower by roughly 7% in the aftermarket trading session here. So currently what we're looking at, if things still stand this way into the open, we'd be looking at an open right around 117.60. And it's truly incredible that the market is disappointed with what it's seeing. These were very difficult comps. The company had a very high bar that they had to clear, and they did clear it. And yet somehow this still isn't good enough for the market. So it's just very surprising, and it's a very good lesson to see how the market reacts to these types of things. You know, you will see situations where companies do sometimes beat the earnings expectations and somehow still fall in the market response in the aftermath of that release. But just off the top of my head, I cannot recall any other situation where I've seen a company announce $50 billion in share buybacks and actually decline in the aftermarket trading session. This is just an unimaginable amount of money, and somehow still the market is not happy with what it's seeing. Overall, I do think that we could trade under a little bit of selling pressure here with this stock into the early parts of the session, but I do think that at some point the market has to come to its senses a bit and realize that any declines here do really represent a buying opportunity. So the real question is, we do have to position for this in some way. So, currently the way things stand, an open right around 117.65 would put us within relatively close proximity to the 38.2% Fibonacci retracement of this most recent rallying price move. This is not the price move that we've been looking at in prior NVIDIA chart analysis videos, but we're going to have to sort of restructure this entire framework here to look at different trends here, especially given the fact that prices did fail at an important 78.6% Fib retracement. Based on the decline from the all-time highs. So as things currently stand, this 131.26 level is a very important level of resistance. And if we do break through there, I think you've got a clear shot to new all-time highs for the stock. But the question is, how far exactly will share prices start to decline before the market starts to realize that This is a company that's actually on sale, a company that just reported very strong earnings and will be buying back $50 billion in stock shares. So, as things currently stand, the real question is how much farther can we fall? So this 38.2% Fibonacci retracement currently comes in right around 115.70. If that were to occur, we would have fallen through three of the major exponential moving averages at that point, and the 200 period exponential moving average would still be quite a distance away. But we're sort of in kind of a difficult territory at this part of the price chart because there really isn't much historical support to be found here. And then in addition to that, the next major fib retracement level to the downside doesn't come in until 106.20. I have a hard time believing that share prices are going to fall that far. I think it's much more likely that we would probably start to find some support at this 200 period exponential moving average. And then as we can see here, this is starting to rise into the 50% retracement level of this prior ascending move. So essentially this would be the move from 90.69 to 131.26. So essentially that would come in right around 111, right around there. So if anybody was looking to sort of enter into this stock, try to get a bit of a discount. If we do see share prices moving lower, I personally would probably be looking for an entry point somewhere around 112.50 as a potential buy zone. Playing on the potential here for a reversal, given the fact that there really wasn't much to be seen in this report that was negative, and in my view, this negative response, this 7% decline in the aftermarket trading period, I think this is irrational, and I don't think it makes very much sense. So I do think that currently this stock is a buy on dips. It's a bit of a difficult price chart at the moment. Because we're sort of seeing a big distance here. And I have a hard time believing that the stock is going to fall, an excessive distance based on what we saw in yesterday's report. So, currently, I guess we could possibly see a decline toward 112 if we see a little bit of a follow through. But I have a hard time believing that share prices could extend much further below there. So here's the current market update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.